Do you have an old 401k or traditional IRA that you'd like to convert into a Roth IRA after you've learned about all the tax benefits of a Roth IRA, but don't want the huge tax bill that comes with it? If so, then this video is definitely for you because I'm sharing a tax strategy and investment secret called the Backdoor Roth. My name is William Moon, and I'm the founder of Financial Advisor Pro. And so, what is a backdoor Roth? You see, when I heard of this many, many years ago, it sounded like some dirty little secret that was in the tax code that the IRS may have not wanted you to know about. But it's actually a legitimate tax law in the IRS handbook that talks about how you could transfer pre tax dollars, like in a 401k or a traditional IRA, and convert it to post tax dollars, which is like in a Roth IRA. And the benefit, as you may know, of a Roth IRA is the money grows tax deferred and tax free, which means the money grows tax deferred, as in it's not taxed each year on capital gains and things like that with most investments on the planet. But also, on top of that, when you take money out, you're able to take it out tax free. And so that's why individuals like this option for a backdoor Roth. So, how does the process of doing a backdoor Roth work? I'm going to share with you three different scenarios that's going to cover everyone's scenario watching this today. And so, situation number one, it's actually not a backdoor Roth IRA conversion. It's called a rollover, where if you have a Roth 401k at an old employer, you can actually roll that over into a Roth IRA at any point, as long as it's from an old employer. And there's going to be no tax consequences due because you're going from one like plan, a Roth 401k, into a Roth IRA, and the taxes work exactly the same. So there will be no tax obligations for doing that. So the second situation is when you have a traditional IRA, if you'd like to convert that into a Roth IRA, that's going to be part of the backdoor Roth conversion process. And so what you need to do first is you need to go out to a investment company and create a new Roth IRA account. And then with that investment brokerage, they'll have a form that you could fill out to convert your old traditional IRA and convert the funds, a portion of them, into your new Roth IRA. Just understand you can only do certain limitations, which I'm going to go over in a second. And then in situation number three, we have a regular 401k into a Roth IRA. And so the way that process works, there's a couple of different steps involved with that. And so the first thing you want to do is you want to do a rollover from your old 401k, your old job, and roll over that 401k into a traditional IRA first. Why? Because that way you're not going to pay any taxes as long as you do it through a direct rollover. And so once you have your new traditional IRA, you want to, in addition to that, go create a new account for a Roth IRA, and you could fill out that investment company's paperwork and convert traditional IRA, a portion of your traditional IRA, into your Roth IRA every single year. And so, one of the important details that you need to be aware of is taxes. It's very simple in the backdoor Roth process, but it's very important for you to understand. You see, the amount that you convert will be taxed at whatever tax rate your income tax is for that year. So, consider that carefully because if you roll over too much, it might actually put you in a higher tax bracket for that year. And so, one of the things that I mentioned I get to is we're here, and that's the contribution limit for doing a backdoor Roth. And so, one of the important things to know is that if you were just a regular investor investing into a traditional or a Roth IRA, it's the same amount that you could contribute as you can also convert each tax year. Okay. And so, as of 2024, you can contribute $7,000 if you're under age 50 or $8,000 every year if you're 50 or above into an IRA, which also means you can convert $7,000 every single year as of 2024. Or if you're over age 50, you could convert $8,000 from a traditional IRA into a backdoor Roth IRA. Now, let's talk about tax reporting. You see, when you convert money into a new Roth IRA, that Roth IRA company is going to mail you a tax statement so that way when you file your taxes, whether you do your own taxes or whether you use an accountant, it's going to specifically ask you on your taxes if you've done a backdoor Roth conversion. That way you could successfully report it and satisfy the IRS requirements. And so that completes the backdoor Roth process. And if you'd like a way to really simplify this and you would like help doing this yourself, then go ahead and click the link below this video and you can actually schedule a free, no obligation consultation with my financial agency and I, and we'd be happy to help you with the backdoor Roth IRA conversion process. So go ahead and click the link down below. Also, if you'd like to know how to allocate your investment options in your new Roth IRA, make sure to click and watch this video right here to learn our optimization and allocation process so it's optimized for your personal goals and dreams.